want to talk about big crypto moves happening quietly behind the scenes. Because right now, nothing in crypto makes sense. Bitcoin is sitting at around $66,000, $67,000, still down roughly 50% from its peak. Ethereum stuck at around $2,000. The market is flat. The sentiment? Extreme fear. So the real question right now is, why would one of the most sophisticated asset managers in the world enter crypto right now? And why, on the other hand, big companies are selling big amount of Bitcoin right now? Not at the top, not during hype, but in uncertainty, in fear, in silence. What do they see that most people, like myself or yourself, don't? So I'll talk about first Franklin Templeton, founded back in 1947. They're managing $1.7 trillion, even over that amount. This isn't, some kind of startup chasing a trend. This is legacy capital. They just made two very big moves at the same time. The first move, they acquired a crypto investment firm called 250 Digital, a company that's barely 3 months old. The second thing they did, they launched a brand new division, Franklin Crypto. Not a test, not an experiment, a full-scale, dedicated crypto unit. With leadership, with capital, with long-term strategy. Institutions have been in crypto before, for the past 3-4 years, but not like this, like they're entering right now. Before, they were just buying exposure, Bitcoin ETFs, small allocations, testing the waters. Now, what are they doing now? They are building whole infrastructure. This is a completely different game that we see happening right now. And in fact, this acquisition that happened recently with Franklin Templeton was paid using tokenized assets on-chain. Tokenized assets on-chain. A $1.7 trillion firm didn't just invest in crypto. They used blockchain to complete a real financial transaction. This is integration, and this is very important. What is happening right now? And I'll tell you something. Every single bull cycle follows the same pattern. If you've been around for some time, if you've gone through at least one cycle, you know the pattern. If you're new, well, I will tell you what the pattern looks like. Phase 1, institutions accumulate quietly. Phase 2, price goes sideways or down. Phase number 3, narratives shift. Phase number 4 is explosion. We saw that in 2017, we saw that in 2020, we saw that in 2023, and right now we are still in phases 1 and 2. We see accumulation happening, and we also have the market going sideways, potentially going further down in Q2 and Q3. But institutions are moving, while price looks boring, while retail is losing interest, while headlines are saying Bitcoin is dead. That's the setup. And let's look at the data. Spot Bitcoin ETFs pulled in $118 million in a single day at the end of March. While retail investors were selling, institutions were buying. And the bigger picture is that Bitcoin ETFs now manage over $100 billion plus. Companies hold millions of Bitcoin. Institutional inflows barely dropped even after this 50% correction. This is called conviction. They are positioning right now. If you want to be like smart money, what are they doing right now? Actually, it's very simple what smart money is doing. They're accumulating during fear. Prices are down, sentiment is low, crypto is dead. This is when they buy. So whoever is watching this video right now, congratulations, you're already part of the smart money. Number 2, they are building before demand returns. Look at Franklin Templeton, which I just explained. They didn't launch at the top. They launched right now when market is dead. Why? They are positioning. They're building before demand returns. Number 3, they're targeting big capital, not retail. Pension funds, sovereign wealth, trillions, not ordinary people like myself or yourself. And number 4, positioning for regulation. As clarity improves, capital flows in. So they're not reacting to the market. They are preparing for it. And regulations are already on the way. The Clarity Act, the Genius Act, and so on. Now, compare that to the retail investors. I hope you're not one of those, but retail investors are waiting always for confirmation. They're always waiting for headlines. They're always waiting for price to go up. And by the time that happens, the move is already gone. The moment where you can make generational wealth has already passed. And this is how it always plays out. All the cycles. The quiet phase builds wealth. The loud phase distributes it. Now, that's on the buying side. What do we have on the selling side? On the selling side, look at Riot Platforms. That's one of the largest Bitcoin mining companies in the world. Not a weak company, not a newcomer. This is an industry leader. They have been selling Bitcoin. And some reports show that they have moved around 500 Bitcoin in a single week, generating millions of dollars. But Unlike many companies, they're not selling because of debt. They are selling for strategy. They're actually pivoting towards AI infrastructure and high performance computing. That means converting Bitcoin holdings into capital to fund a new business direction. So, some strong players right now are choosing liquidity over exposure. That's one. They're not selling because of panic. Look at Bhutan, for example. That small country with population under 1 million. Over time, Bhutan built up a significant Bitcoin reserve through mining rather than buying. So at one point, estimate was suggesting that they're holding more than 13,000 Bitcoin. But recently, they have been selling, and that's visible on the blockchain. As you can see over here, more than 3,000 Bitcoin moved in recent weeks alone. Now, you might come and ask me, why are they selling? Well, unlike leveraged companies, Bhutan didn't borrow any money to buy Bitcoin. Their cost basis is extremely low, which makes their selling very different. This isn't panic, this is monetization. They have been mining, they have been buying at very cheap prices, so for them, it makes sense to sell something at those prices and potentially relocate. And the only thing that all of the sellers have in common is they're either late entrants, likely retail investors, leverage players, and restructuring companies, like I gave the example earlier, or strategic relocators, like Bhutan, for example. So all these players that are selling right now, they have some other strategy in mind. Those who are panic selling are those who bought high or borrowed to buy, because this creates a lot of pressure. The debt doesn't wait. Markets don't care about your entry price, unfortunately, and this creates a simple but powerful dynamic. When prices stop going up, the weakest structure break first. And this is not unique to Bitcoin. This is for every other market, real estate, stocks, in every leveraged market in the history. So if you hear others talking about big money, smart money selling, well, this is not a collapse. This is not forced selling. This is just a rotation. Because while we see some are selling, others are still holding massive positions. Public companies still hold over 1 million Bitcoin collectively. That's over 5% of the total supply. So the system is not exiting Bitcoin at all. It is redistributing it. We see rotation happening. Some players are positioning in other sectors. New players are coming into the picture. Some other players are expanding their positions. It's pure redistribution. The setup is the same. Every time, every cycle, we go through the same quiet phase, accumulation phase, where only smart money is interested. Retail investors are quiet. This is where we actually build wealth. So that's for me today. Thanks so much for watching. I'll see you in the next video.